Hello everyone, I am Mayur Jagtap and welcome to My Capital Choice. So today we are going to overview about overall capital market, what is the scenario and what will be the possibilities for upcoming week or upcoming month. So let's uh, see on the chart. Uh, in October 18, in October around 19 October, Nifty made the first top, and after that there is another lower top around 18,344, then next lower top around 17,769, and it may be 16,747 around this range. This may be the 4 lower top. So wherever there is a lower tops, then there will be the possibility we are going in downtrend direction. This is the first phase of downtrend. This may be the second phase, may over here around, and we may now going to enter in third phase of the downtrend in the Nifty. It may like around May to June. We are going to head towards lower side, more lower side from current level. So this will be the scenario for upcoming time. Now we are going to enter in third phase of downtrend, and still there are many people who are in denial mode. The market will bounce back from this level and they are going to see new highs in the market, but you have to take or calculation of risk, the maximum risk calculation you have to taken into the consideration. So it's clearly visible. Here is a two tops which made by the Nifty. After this fallback there is a chance to exit for investors, but that time many people or many advisors told this is V-shaped recovery or steep recovery in the market, and we are going to make new high in the market around 20,000 21,000, but that possibility vanishes as market show its true color. And currently also here is a major level where we stand, or you can book your some profits from the market, because many of the people brought the stocks at very lower prices, very lower side when COVID crisis was happen. So if you are still in profit, as I saw recently, there are many peoples whose portfolios are in red with just this 10-15% correction in the market. Just imagine it is only 10 to 15% correction in the market and your portfolio already down by the 30, 40, 50%. Just imagine what if the market corrected for 30 to 40% or 50%, where will be your portfolio's PNL will going to head. So this is very serious issue about equity investment. Protect your investment. In capital market there is a first principle or fundamental principle. If you want to stay in the game, you have to protect your capital. If you can't able to protect your capital, then you can't make more money from that capital. So first, there is always priority to protect your capital. Even if you are sitting on net zero profit, you making some profit, again getting some losses, it's okay, but protection of capital, it's very important thing in the capital market, because you are not here to make millions in 1 or 2 years. It is a very long game, and you have to keep that patience. You have to vision of 15, 20, 25 years if you entered into the market. So another one is this is a daily chart of Nifty. Next thing is we are going to look over weekly chart of Nifty also. As we can see, in last week there is sharp recovery in the market, and many people hope get this opportunity to exit their equity investment at positive note. So once this low break next or upcoming month, this week's breaks low in near time, so there will be the more downside in the market. And I already updated in Telegram, it will heading toward 4496 around that level. So from here around 2000 points downside can be possible in upcoming time, and in May 2020 we can see the levels of 11,000 in Nifty. This is the possibilities. You have to calculate a maximum risk for your trades or investments. So next thing is, along with that, development in USD INR form also. So in last week there is a sharp price action in the USD INR. It made high of 77.5 around, but it closed at lower end, and next week we may see this trend line can be break by the USD INR. If that happen, in whichever week the crude oil closes above 77 rupees, so that will be the confirmation we are heading to level of 80-82. So that will be the levels if USD INR closed above the 77 on the weekly basis. So why USD INR is so important, because, and why FI is selling? Here is a root cause why FI is selling. Can we consider like FI has entered few years back in the Indian market, they put up some money. Mostly after 2008 crisis, FIs are in dormant state after selling in 2008 crisis. After that, our economy not in such a good shape. So around 2013, when Raghuram Rajan declared his monetary policies and other things, that time FIs get attracted to our Indian market, and after that around 2013 we break the high of 2008. So we took around 4 to 5 years to break high of 2008. So always keep remember, if there is a high in the market like our recent high of 18,600, also if there is always possibility the recent high of the market cannot be break for upcoming 2, 3, 4 years also. So that will be the risk in the equity market. So let's come back to the point why FI is selling and how it's correlated with USD INR. Just take example, FI has come with $100 around 2013 or somewhat that around period. So that time USD INR ratio is for $1 there is a 60 rupees. So if they want to invest in Indian market, they have to convert that in Indian rupees to brought our stock, because our stock are trading in the rupees. So they come up with $100. That time conversion currency exchange rate is 60. So we are just assuming this figure. They put the 6,000 rupees in the Indian market in few years back. But currently, what is an issue? The dollar become 75 rupees, and there is possibility it may go around 82 rupees. So even they get the profit on this, they get double profit. Their amount may become, we are just assuming, and they get 12,000 rupees. So they are on sitting of their money, which is 12,000 rupees. They converted their 6,000 rupees investment into 12,000 rupees. So what is the scenario now? The scenario is that 12,000 rupees in terms of dollar. So current rate is 75 rupees. So what is the amount in terms of dollar? 12,000 rupees, it is $160. So why they selling in Indian market? They have fear, or it may be they have sure shot conclusion the USD INR exchange rate is going to shoot up and rupees get devaluated. So if in case there is a dollar become 82 rupees, what will be the case? Currently they are sitting on 12,000 rupees profit. In terms of dollar, it is 160 rupees. Means they have sitting on $60 profit. So their investment will remain same. It is 12,000 rupees only. Their profit, their amount in the market. But that time they have USD INR conversion rate is 82 rupees. What will happen in that case? In terms of dollar, they are sitting on the profit of $146. So this is scenario. If their profits are not going to increase, as there is a low consumption rate in the economy and USD INR conversion rate going to higher end, so that time their profit may drag down from $160 to $146. It is loss of $14, and they don't want the such losses due to currency exchange rate. That's why they are leaving the India's investment in India, and they want to book their profits. That's why there is a one-off reason why FI is continuously selling since last almost 1 year. The FIS selling was not just started in November or December 2021. It was started in March or April 2021. That time I also alerted FIS started their selling. Be aware, this is the last phase of the bull market, and in October, after that 4 to 5 months, we are under our bull cycle, and it's it is bear cycle or what, but it is well destroying cycle. So this is the reason behind why FIS selling their investments. Next is we have to look over Brent crude prices, because our country is largely depend on oil imports for energy purpose. So crude oil prices are very important to us. The prices above 90 or $95 are not favorable to our economy, and our budget and most of the economic agendas or plans of government are mostly based on the prices of crude, which is range in around 85 to $70 rate. So if that calculation going wrong, as crude prices shoot up above $95, our forex reserve also getting dragged down. I think we are around $650 billion of forex reserve, but and also recently our BOP, balance of payment, and like trade deficit, what trade deficit is a very correct term to describe that. Our trade deficit are increased, overall trade deficit. So what is mean that we are importing more and exporting less. That's the reason our trade deficit are increases. So if our trade deficits are not good, along with that, as we are largely depend on crude oil import, and crude oil prices at higher levels, our forex reserve will going to vanish very soon. And this Russia Ukraine geopolitical issue and the sanctions which US putting on various nations, it is very serious issue, because if US puts the sanction on some country, it will not going to end in 1 or 2 years. Because last time when we tested nuclear program around 1998 or 1999, if I may be incorrect about the year, but after that USA put a sanction on us on the defense sector, and which was still there around 2007 or 8 when PM Manmohan Singh and George Bush met and they made a deal. That time the sanction was closed, or that get backed by the USA. So the sanctions is very a crucial game in geopolitics. So this is the overall scenario about capital market of India. And let's come back to the our stock indices Nifty. So the low of this week, which is 15,671, which is around 1,000 point from current level downside. We have Nifty need to break that low to form a new low in the market. If Nifty want to go for 40,500 level in upcoming 2 weeks, Nifty have to break recent low of 15,671. If that low break, there will be the more 1,000 or 1,500 points rally in the market can be observed. So before doing investment in stock market, always do your own research, because you are putting your hard earned money into the market. Also be careful about doing your SIPs. Is like SIP means you are the paying salaries to the mutual fund managers. You are working for them. You are putting hard earned money for their lavish lifestyle of fund managers. So even investing through SIP Be cautious because no one know where it will head, or Nifty 50 is not depicting the clear picture of the entire market, because we are just traveled from 18,600 to 16,630 in this very short range. Index was traveled downside around 2000 points only, but many stocks, around 20 to 30% stocks was gave the correction of 30 to 40% correction. So stocks are more deadlier than the index. So if company not generating profits, it's not reporting positive cash flow in the balance sheet, do not invest in such companies. Like recent example also, there is a news about Paytm in last evening, yesterday's evening. RBI barred Paytm payment bank by to acquiring new clients. So already company is not generating any positive profit or net profits, and this new restriction by RBI, it will going to more tougher to the investors as well as company also. And there are many people who brought the Paytm stocks. It is around 1300 1200 that time. Many influencers was very bullish on the Paytm. They said it is just a normal correction, it will bounce back, buy on the dips. But it is currently traded around 750 rupees, and if on Monday we may see more downside in the Paytm stock. If you have invested in Paytm, get out from that stock. It may go below 200 or below 300 also. So do not destroy your money or capital in the stock market. Do your own research. Do not invest on anyone's tips or anyone's recommendations. You can get view of someone's, but you can't rely or completely depend on that person's view. Make your own view. Only invest in companies which are generating positive profits. And as currently market is damn overvalued or highly overvalued, let's wait. Don't be hurry to jump in the market. Let's all things will settle down. After that only you can put your money in the market. But currently market is very overvalued, and do not believe on that SIP things or buy on dips thing, because buy on dip, no one know how it will go deep. So how much money, you don't have a source of unlimited money, you don't have a RBI printer in your house. So do not believe on such SIPs and buy on dips thing. It is just marketing strategies for of the financial world or financial institutions, because the financial institution, they have to sell their products, they have to sell their services. That's why the all illusion, the all investment books and other books are created to depict that come here is you are going to make wealth. But there is a reality, only 1 or 2% making wealth, because there is no new money coming into the market. It is just one person's money get transferred to the another person's account, and the brokers, the exchanges, clearing houses, governments all getting their shares in terms of tax or fees which you are paying on your transactions. So be aware, it is just transferring fund from one account to another account, and this financial institution gets their share or they get their transaction fees. So to minimum transaction, do not trade unnecessarily. Do not trade, don't over trade. And what more I can say, it is just use your own mind. So this is all the overview and scenario about capital market for this episode. We can connect in another episode with another topic or in detail discussion about capital market. Till now, thank you, bye bye.